because if you think the outcome is going to be a big positive outcome and you buy it, you don't want to be on the other side of that big positive outcome. So you buy assets ahead of the big positive outcome and you take advantage of it. Well, if you look at the dealer positioning ahead of the euro, the presser, what position was the dealer positioning on this? Well, let's take a look at that level there. See it? That is all lower than that breakdown here. So if we look at that price area, you can see that that price area is flat. Completely flat. So what is the dealer positioning during that period? The dealer is getting long during that period, aren't they? The dealer's getting long. Well, if the dealer's getting long, is this outcome what you'd have expected? Of course it is. So there was a very obvious dealer long position in here, which has just been getting closed off just now because of the delta. So there's a dealer long in that situation there. So obviously if there's a dealer long in here, ahead of the 1:30 press, you're already thinking, well, if the dealers are getting long ahead of the 1:30 press, that's information that I can use. And that's exactly what we were talking about this whole week, isn't it? The idea of whether they are, whether they're not, what they're doing, the idea of how they're positioned ahead of a data release, the idea of being able to use that as one of our tools to try and figure out what they're trying to do ahead of any data release. And that's great news, because that means that you can actually start positioning yourself according to that if you want to take one of those types of gambles, because it is a gamble, of course. But if you want to try and take some of those types of gambles, at least you've got the ability to stick with the dealer positioning so that you know you've got a better than evens chance, definitely a better than evens chance of making the right trade at the right price. So if you took the euro on the long side and into the numbers, into the presser, I like your style. It shows that you're understanding what we're talking about here, guys. Okay, we've got a bit of DVO1 adjustments required because of the fast break south on the bond. We're not concerned about the fast break south on bond because we were short, if you recall. So selling the bonds off that 16s, we've now seen a fast breaker south down into a low price now of 22s. It's been a good sell side day, guys. It's been a good sell side day, but I'm starting to see the change taking place with regard to the DVO1s now. That's starting to give me a little bit of an interest. We've had that 2s5 split bigly from the knob spread on this one, with the belly staying in the middle. So I was waiting for a little bit of insight from the belly. If the belly drops a little bit, then that's going to allow you to buy lots of bonds at the bottom edge. If the belly rises a little bit, you just don't try and buy the bond at the bottom edge. It's pretty much as simple as that, guys. The sell on bonds has worked out sell side, but obviously I'm not on board. It's simply because I'm not on board. It didn't have any value for me to take advantage of. How good was the oil, Tim, from earlier when you started to see the divergence against the FOBs? Pretty good. It wasn't just the FOB, of course. It was the inflation break-evens. It was the rest of the commodity markets. It was pretty much everything. But obviously, that's something we called as a classroom. We were talking about that story a short while ago. We were talking about the overall story of that narrative, and when you see that divergence, that's exactly what we're talking about getting that bit of business in. You know, when that starts going in the opposite direction from the FOB itself, you know that there's going to be a possible opportunity to take advantage of that bit of business coming in. And sure enough, Tim shouted it in the room earlier on time, showed you what the talked about what the trade was setting up, and said to you guys, here it is, look, if you fancy it. let's get some business done here, right? Let's get some business done in this area. So great trade. I like it. I like it. I like it a lot. I've bought a lean against the S&P there. I just bought some 55, 75s, 56s. And a reasonable trade. We'd seen some dealer longs coming in, but there was a level 2 liquidity right below us. They ran and sprang the level 2 liquidity with the selling deltas. We got the lean, and we were able to buy some 55, 75s against the lean, and we've taken it up to 57.25. So a pretty reasonable trade. Stops at break even, worst case, and we'll see if it holds. If it doesn't, we'll maybe go again into this trade. We'll maybe go again because the dealers seem to be keen on the long side at the moment. The dealers seem to be keen on the long side, so I would be interested again in snapping up some longs on the S&P at the present moment. So that's quite interesting. So against this change of behavior level in the background, you can see they just ran the spring right there against a lean, and the dealer picked up some longs into that bottom edge. And as I said, we've had a fairly reasonable upside pop on that so far, and as I said, stops at break even. So again, no danger.